protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome into the Money Unleashed podcast with Chris Hoffman of the Hoffman Financial Group. New episodes come your way on Mondays and Fridays, so make sure you're subscribed wherever you get your podcasts. Now, on Wednesday, the Federal Reserve announced that there will be no changes in interest rates, marking the fourth time in a row they've opted to do that. Many, if not most, may see that as a financial hurdle of sorts, particularly for borrowers, but we've talked about the far-reaching effects that interest rate hikes or cuts have, and there's actually some opportunity built into these higher interest rates, isn't there?
Yeah, absolutely. I'm applauding the fact that they haven't lowered interest rates. Why? Because inflation has not spiked up as they thought would happen with all the ramblings about tariffs. So inflation seems to be relatively under control. I know it's still a nasty thing out there, but it's not spiking, and interest rates are sustaining at a higher level, which helps retirees. Most retirees have very low debt. They don't run up credit cards. They don't have multiple mortgages. They're typically at the tail end of paying off their primary mortgage. They hopefully don't have student loans anymore, right. And they're not leasing cars. So if the retired community has a low requirement for borrowing money, but their money is valuable for others to borrow, right? Loan it to the government, treasury bills, treasury bonds, loan it to a corporation, corporate bonds. That's a good thing for us if we can generate 4.5%, 5%, 6%, 7% in fixed income, and that reduces our exposure and need to push into the stock market. So I actually like where it is. Yeah. Now, I know President Trump's view on it is he wants to lower interest rates because that typically spurs economic growth. Now, and there is a balance. I'm not saying don't lower interest rates to make sure the economy is healthy and borrowing is robust and R&D happens and companies are able to hire more people, et cetera, et cetera, et cetera. I like the expansion plan around the overall economy. But for my clients who are in large part, every one of them are retired or very close to retiring, I like the fact that they can become the bank. They can loan their money out to others and get an income stream for it, and it keeps them from being way too over-leveraged into the stock market. So I'm fine with interest rates staying right where they are until Fed Powell and Trump get into a fist fight and a wrestling match and figure out who wins.
As you look at President Trump, I mean, obviously he's got thoughts, and he had some choice words for Fed Chair Powell for not lowering rates. And Trump actually suggested that he would do a much better job heading up the central bank. We don't expect to see that swap anytime soon, I don't imagine, but what effects do you think that the current administration's sweeping policy changes and tariffs in particular or other initiatives has on something like interest rate decisions?
Yeah, so first I will say that Trump was not the first person to say he would do a better job as Fed chair. I said to elect Chris Hoffman, and I was kidding, obviously.
And we printed the shirts.
Yeah, I know.
Give them out.
And paid a bunch of money for the campaign, all for naught. But it is interesting that he's publicly saying he doesn't like Fed Powell and he doesn't think Fed Powell likes him. I don't get it. I don't want to get it. But let's talk to the point of interest rates versus economic growth and where this tug of war lies. Naturally, you want interest rates to be near zero because there's a lot of corporations and entities out there, including our own government, that are running up massive debt. So the trillions of dollars that we have in national debt is in large part based on the government borrowing money from all of us and selling us treasury bills, treasury bonds, et cetera, et cetera, et cetera. So when interest rates go up and they're paying more to all of us, that exacerbates our ability to pay down our debt and run a balanced budget. very difficult. So that's one thing that Trump wants to accomplish, which is basically be able to borrow money for free. That's the mission. The unfortunate part about it is now you've got something pulling it in the other direction, which is called inflation. The more money you're able to flood into the economy at cheap or zero interest rates, and I'll use myself as a prime example. In 2020, I bought a house and I called my CPA and he said, "Did you take out a mortgage?" And I said, "No, I've been blessed and I could afford to write the check." And he chastised me and said, "Go get a $750,000 mortgage immediately." So I got a 10-year mortgage at 2.5%, which means I'm in the bank's pocket as long as I'm making more than 1.5%. So there's engineering that some people want to create in having extremely low interest rates. On the other side, when you've got that much money floating or flooding the economy, it's naturally going to spike inflation. Because if you've got $100 in your pocket, you're willing to spend a little bit more than if you've only got $10 in your pocket. So there's a balance between how much money do we release into the economy and how much damage does it cause by raising pricing. And then you've got another inflationary issue pending, which is tariffs. So if the tariffs take hold and prices go up because of that, that's an inflationary pressure. And that's where Fed Powell sits and says, I don't want to flood the economy with any more money.
Right.
I don't want runaway inflation. I want to see the impacts of these tariffs first to note and see if there's going to be inflationary pressure. If there is not inflationary pressure, then yeah, I believe Fed Powell will be forced to begin lowering interest rates as early as possibly later this year.
Yeah, and that I think is the next obvious question for folks out there. Like, okay, if not now, then when? So the Federal Reserve left interest rates unchanged for the fourth straight time, as we discussed, but officials indicated they do expect to cut rates, perhaps twice, by the end of the year. We are 6 months into 2025, though, by some very simple math and the calendar right in front of me. We already talked about what we think the Fed wants to see, but I guess in the larger sense, or maybe the individual sense, what should we be focused on right now?
Yep. So we should be focused on taking advantage of whatever the markets give us. And I think that that's a lost art or oftentimes ignored. Everybody is so focused on the stock market that they don't realize that higher interest rates allow you to reduce your stock market exposure and still get a high fixed income payment. So while interest rates are up, talk to your financial advisor about what fixed income and what levels and percentages are people willing to pay me for my money. And then if the Fed decides inflation is under control, we want to spur more economic growth, so we're going to lower interest rates, then your financial advisory team should be repivoting from fixed income back into the stock market because that most likely will spur economic growth and corporate earnings will improve and the stock market should typically rise under a low interest rate environment. But folks, it's simple for a good advisory team. You're just looking at both sides and saying, if they do this, we're going to benefit over here. If they do that, we're going to move and benefit over there. And that's what a good, I believe, fiduciary advisory team does for you. They take advantage of whatever the markets give us. They don't try to dictate. They don't try to guess. They don't throw your money up in the air and just let it fall wherever it falls. There are strategic initiatives that we can look at when the economy moves, when interest rates move, when inflation moves, and the reaction that the government has to it oftentimes sets a course for the stock market and or interest rates, which we can take advantage of.
So when it comes to interest rates and this discussion, as you just laid out, you may not be looking to borrow money, but there may be people out there looking to borrow your money, and built into that is where the opportunity lays.
That's exactly right. In effect, when you're retired and you have a certain amount of net worth, you've got to look at yourself as becoming the bank. People now want to borrow money from you. That's a powerful thing. for you to be in control of people wanting to borrow your money and pay you to borrow it, that's the position we want our clients to be in. But you have to have that rotation and that active portfolio management so that you don't miss out when interest rates go up, or you don't miss out when interest rates go down and reposition back into the market. So that's what we're here to do for our clients.
And those folks that are out there maybe doing it themselves right now, you just mentioned something I felt is very important to be aware of, and that is active portfolio management. That's another tenet of how Hoffman Financial Group handles and works for its clients. Talk to us a little bit about what exactly that is and why.
It's a mandate at Hoffman Financial Group that every client of ours gets a quarterly text. You can open up your advisor's calendar, literally real time, and pick a day, pick a time, and pick a location. Whether it's a Zoom meeting or whether it's at one of our 6 offices throughout the Atlanta area, we want to make ourselves available to you to not just report the score, not just report, hey, how we did over the past quarter, but to forecast out over the following 90 days or 6 months or for the remainder of the year and bring you up to speed on these important topics that are afoot. We are prepared to talk to our clients on a quarterly basis to make sure that we've got that professional intimacy and the lines of communication are wide open, and we get to learn about what our clients are experiencing and how their life is changing quarter over quarter, year over year. But any of you that are only meeting with a financial advisor once a year, I think that that's a mistake. They are not dialed into you and your individual family and your individual goals and objectives. They are looking at you as a sum of the whole account base that they manage. So I think quarterly meetings are crucial in retirement planning.
Yeah, don't settle for being just another number for someone. Hoffman Financial Group has the tools and the strategies to help you optimize your financial life, regardless of the headwinds that we're facing. It starts with a portfolio x-ray, it rolls into the full financial plan, and it's all complimentary. Hoffman Financial Group can create one of those reports for you. It will provide you with some valuable insights to suggest steps that you can take to optimize your accounts. And the best part, there's no cost whatsoever to get started. 404-341-6767 is the phone number. That's 404-341-6767 and online at unleashyourmoney.com. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A, item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.